Hello, investors. Welcome to the Investing Basics podcast. I'm your host, Michael Doan. Today, we're going to be learning about value investing. In this podcast, there will be three main topics that we will be covering. The main topics for today will be differentiating between value trading and value investing, differentiating between assets and liabilities, and lastly, creating an action plan using the knowledge you've learned to help you with your financial success. Alright, let's get started. First, we'll talk about value trading. Value trading is a trading strategy that involves picking and buying stocks that appear to be trading for less than their intrinsic or book value. Value trading also involves holding onto a purchase until it can be later sold for ideally at a higher price. In addition, value trading involves exchanging a security for another one that's ideally greater in value. Let's take a quick look at a famous example of value trading. So this example is known as One Red Paperclip by Kyle McDonald. I'll leave a link in the description below about his book, so if you're interested, you can read more about it. Anyways, the story goes that Kyle started off with one red paperclip, and he wanted to see if he could trade that one red paperclip for something greater in value and how far this experiment could take him. So let's assume that his one red paperclip has a numerical value of 5 cents. Using that one red paperclip, he traded his way to a fish pen, which has a numerical value of $1. From there, he traded his fish pen for a doorknob, which has a numerical value of $10. Afterwards, he traded the doorknob for a Coleman stove, which has a numerical value of $40. Anyways, by this time, you should start to have an idea of what's going on. Eventually, Kyle traded his way to a mansion which has a numerical value of over $1 million. Basically, he started off with having something that only had a numerical value of $1 and ended up with something else that had a numerical value of over $1 million. So, what are the lessons to be learned from this story? Well, there are two lessons. From this story, you should learn that everything has value, and anything with value can be negotiated. Now, let's contrast value trading with value investing. Value investing is an investment strategy that involves picking securities that appear to be trading for less than their intrinsic or book value. For example, let's say you wanted to grow a seed of your choice. You pick your seed and you give it some soil, some water, and some sunlight in order to grow. Of course, this takes a very long time, but through your efforts, this seed begins to sprout and grows fruit. You can later use the fruits that come from the seed in order to plant either new fruits or take the fruits and consume it. Perhaps even take the fruits and sell it. In this example, there is a lot for you to do when you do value investing as compared to value trading. In value trading, you take one item and you try to get another item. In value investing, you take that one item and you grow it until it produces fruit for you, and you can take that fruit to create even more value. Now, this leads me into another point for value investing. In value investing, you have to learn the difference between an asset and a liability. An asset is a resource that has economic value which someone owns or controls with the expectation that it will provide a future benefit. In other words, assets are something that in the future can generate cash flow, reduce expenses, or improve sales, regardless of whether it's manufacturing equipment or a patent. Here are some examples of an asset. Cash can be used as an asset if you invest it into something like stocks or bonds. In addition, if you have a business, that is also an asset because it is creating cash flow. Lastly, if you have something like a rental property, this is also an asset because you can use it to collect rent from people you lend out the property to in order to live. Now, let's contrast this with liabilities. Liabilities are something that a person or a company owes. In addition, liabilities are future sacrifices of economic benefits that the entity is obligated to make to other entities as a result of past transactions or past events. For example, liabilities include loans, your wage, utilities, and taxes. Another very simple example of a liability would be your car. Most people own a car which they use to travel. However, owning a car costs a lot if you think about it. When owning a car, you have to think about its depreciating value, the amount of time, energy, and money it takes to upkeep the car. Essentially, owning a car is a liability because it doesn't produce cash flow. Instead, it takes away the cash that you could have had in order to use that money for something else. Now that you know the differences between an asset and a liability, what are you going to do with that information? Well, for starters, you can start creating your own wealth action plan. A wealth action plan essentially has you obtaining knowledge that you need in order to create wealth. From this podcast, my goal is to teach you how to create wealth through investments by arming you with the knowledge that you need in order to leverage your money. Specifically, one way to leverage your money is to invest in companies that are at undervalued pricing but will eventually rise in price because it has a very strong economic moat. For example, think of companies such as Microsoft, Apple, Pfizer, 3M. These are well-known, big branded companies that have a competitive advantage in the market and will generally go up in price over time. In addition, these companies that I've listed pay out dividends, which is basically money paid out to shareholders who have ownership in the company. Now, of course, in order to have a well thought out action plan, one needs to be educated enough to make the plan in the first place. So my recommendation for you after you listen to this podcast is check out some of my other videos that I post on this channel in order to learn more about investing. In addition, there are some books out there that you can use in order to further your education about money and about investing. Specifically, in order to learn the basics of investing, I like to refer to these two books right here. One of them is called The Intelligent Investor by Benjamin Graham, and the other one is called The Little Book of Value Investing by Christopher Brown. These are two books that I highly recommend, and you can easily pick these up at your local library or on Amazon for less than $5 or $10. You can use the link below in the description box in order to obtain these books. They are affiliate links, so they do help out this channel. However, don't feel the need that you have to use the links. You can just go onto Amazon or any other website in order to purchase these books. Or I guess if you're tech savvy enough, you can probably find these books somewhere on the internet in a PDF format, and then you can just read it for free. Lastly, one thing that I will mention is that I will put up a card description at the end of this video in order to provide more guidance on other videos that I've made on this channel, which will hopefully help you with your investment journey. Thank you so much for listening to this podcast. I hope it was helpful. If it was, please leave some comments in the video below and let me know what you thought about this whole podcast that I'm doing. Any feedback would be greatly appreciated. Again, thank you so much for watching and listening to this podcast until the end, and hope you all have a great day.